Hi, this is Troy Patton. Today's Monday, October 13th. My voice is a little raspy this week from yelling maybe at my screen last week watching all the stocks go down. But today we're seeing about an 8% resurgence in the market as we speak. The market's not closed. It's actually, we got about 45 minutes left to go, so it's kind of interesting. We'll see what happens the rest of these 45 minutes. I've been doing a lot of reading of history over the weekend and through last week, and kind of comparing this downturn in the market, or frankly this crash of the market, as maybe a better term, to many of the other crashes or declines in the market. And we always think everything's different every time. But one thing that I was reading and doing a little bit of studying on is this whole mark-to-market issue one more time. Again, in 2005, the FASB, with the help of the SEC and Congress and everybody, enacted this mark-to-market philosophy where we have to write our assets down to whatever they're trading at on the open market. When in reality, that's foolish, because the expected future cash flows of these things are obviously a lot better. A $100,000 mortgage on a home worth $150,000 surely isn't worth $15,000. That makes absolutely no sense. If we would have had these mark-to-market rules back in 1989, 1990, when all the S&Ls and banks went under, literally every bank in the United States would have been bankrupt. Hands down, period. So once again, I'm going to harp one more time. They need to fix this mark-to-market issue. That's obviously a major problem. I'd say too, the other thing is that I hear a lot of people wanting to sell into the panic and into the fear. Guys, that's exactly what it is. Panic and fear selling. I think it's absolutely absurd. I've heard people say, well, people say they ought to move into 100% cash. That makes absolutely no sense. Stephen Lutold is one of the greatest minds of investing today. I mean, even he put together some information showing that selling now would just be stupidity and irrational, or it shows stupidity. And that over the next 3 years, we should be able to enjoy 15 to 16% average annual returns if history proves itself once again. And then even over the next 10 years, we could have average annual returns of 15%. I mean, go back and look at 1974 when it was the end of the world. One more time. Isn't it amazing how many times the world possibly ends, but it just never seems to do so? I always find that interesting. In 1974, same type of scenario was going on. Oil was, the oil crunch was in place. We actually saw a 50% resurgence in the market from a very steep decline. Now, obviously, if it drops 50% and goes up 50%, you're still down. But a 50% resurgence in the market. This bounce that we're seeing today, maybe it'll go on. Maybe we'll get about 15% until it kind of slows down a little bit here. But you never know. I mean, there's a lot of undervalued stocks out there, in my opinion. Again, today is Monday. It's October 13th, not the luckiest of days, 2008. I look forward to talking to you again next week in the market. Stay invested and stay true to your investment philosophy and your goals. And I'm hoping that we should work out pretty well. Thank you.